Good afternoon. After another 100-point decline in the market, I'm sure people are getting nervous, and we wanted to share our ideas and our thoughts with you. People are blaming the market decline on a severe drop in the price of oil. That is true. But when you look at and analyze the drop in the price of oil, it's negative for the oil patch or oil producers in the United States, but it's indeed positive for virtually every other aspect of the economy. For consumers, it gives them, it's like a tax cut. It gives them more money to spend. For producers, the raw material costs in whatever they make, whether it's fabric, whether it's plastics, the raw material cost is lower, so their profits should be higher. On an international basis, when you compare the U.S. producers with foreign producers, because oil is denominated in dollars, the strong dollar means that we enjoy the bigger drop in the price of oil than our foreign competitors. They have had currencies that drop, so it means they have to pay more in their currency for oil, even with the drop. So perhaps the price of oil to our foreign competitors represents half as much. So from a cost standpoint, it puts the U.S. at a very competitive advantage. So the outlook just on the price of oil is indeed a positive economic one. It's a powerful story. The problem has to do with concern regarding the debt surrounding the oil patch. Many of these fracking companies have come to be simply by borrowing money, offering to pay high interest rates to a lot of individual investors seeking yield. Many financial firms have rounded up these investors, offering them attractive interest rates with no indentures at all in the debt, and they have loaned money, what we call junk bonds. So if the price of oil continues to stay down for a long while or even drops lower, the chance of repayment on some of this debt becomes questionable. So now we have a credit issue. It's a credit issue not just in the U.S., but it's a credit issue for foreign producers as well, because they typically borrow in their businesses in dollars. And things are fine when the dollar weakens, but when the dollar strengthens, that borrowing grows. And it can put a lot of these firms in a position where they can't pay the debt service. So default could come from lesser developed country paper. So it's not just Greece. It could be Venezuelan paper. It could be even some of the Brazilian operators. It could be anyone or U.S. oil company. But if we have a debt issue, a debt problem, it won't be a lot different than the mortgage problem that we had about 8 years ago. So this entire issue is what's really bothering the market. It's the credit aspect of it. Stay away from junk bonds. Do not buy structured products, structured notes, preferred stocks that if they don't have the money, they don't have to pay the dividend and you're stuck. All of those kinds of issues are a no-no. We don't use them at Cadinha and Company, so as clients, you need not worry about those. We're not on the front line of this market decline. Our oil's largely confined to the largest and the best, the Exxons. We're not concerned about those kinds of oil companies at all in here. The story, when you really take it apart, is quite a positive one, except for the debt issue, and that has to be watched closely, which is precisely what we're doing. So it's not time to jump out of the boat because the price of oil is declining. That story in and of itself is indeed a positive one. So it's a bit schizophrenic, but hang in there. Good day.